Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, December 15th. Today, we got retail sales 1 hour before the open, and data was better than expected. We were coming from 1.3% on retail sales month over month. We expected minus 0.1 on the negative, and we got 0.6. So looks like retail sales are starting to feel the pain. Initial jobless claims also at the same hour, 8:30, came lower than expected. So we wanted jobless claims to go higher, at least the same as the previous one, but we got a lower reading. That's bad because the Fed is watching closely labor market. Also, jobless claims came lower than expected, and that was the initial sentiment at 8:30, and after the open, we got manufacturing production in the negative, year over year, also reducing from 2.4 to 1.2%, and retail sales inventories also in the negative, and nothing else on the day. So let's see how markets reacted. As you can see, we were actually starting to cool right before open. This was the point of retail sales. We went lower. We established support at 11,648. If we check the 30-minute chart, this was a nice level of consolidation from Monday. And right now we were watching that level, and at the open we rejected this pre-market pivot and we just went lower. We broke support, and we started rejecting these levels, chopping around, and a nice move to the second level of support at 11,550. That was this level of support on Wednesday the 7th. So these two levels that I was watching, price action, as you can see, this level at 11,535, this blue dot line is last week low. You can see we have in the daily a nice support, and the support of also last week level low, and right now we are at that level, also trying to build some support, struggling a lot but not going lower. This, I think there were a lot of shorts down here that were trying to push a move down, because there's a lot of empty space down here until 11,200, 300. There's a lot of potential to the downside, but we are holding. As you can see, we are barely holding, chopping around, trying to reclaim last week low and this pivot at 550. And this is what we are doing. We are super in the red right now, 2.87 on the Nasdaq, 2.23 on the S&Ps. Apple is 3% in the red, trying to build some consolidation, bullish divergence on the RSI, so that looks interesting, but don't get too confident. The day is super bearish to the downside. Minus 3% on Microsoft. Tesla is the only thing green on the day, 0.80%, but I mean, Tesla is not a good example of bullish price action because we are at lows of year. So that's just some kind of pullback after Elon Musk is selling millions of shares of Tesla. So Tesla trying to hold, but again, Amazon 3.60%, consumer discretionary feeling the pain, minus 1.92% on the day. And technology 3% overall. The sector fund is being demolished, destroyed. Nvdia 4.78% in the red, rejecting this curl of the lows. And Meta 4.37 in the red. So a lot of pain on the Nasdaq, on the S&Ps, now rejecting this last week low level again. And looks like we are going deeper and deeper down. So watch out for that. Dollar 0.75%. This is a nice structure of support. If we check the 2 hour, Look at this. We are building quite a lot of momentum. Let's check the daily better. We are building quite a lot of momentum to the upside after FOMC and CPI data did a nice pullback, and now we are trying to sustain 104. So, but we are struggling. We are at these levels at which we might find some buyers, but again, we are under the 200 moving averages, and this is looking quite weak right now. So I'm expecting, again, lower pricing, and any pop will be met, in my opinion, with short sellers. So let's talk about the yields. Before going to the yields, let's do a quick recap of the Fed proc, the plot of rates that the Fed showed during the press conference. So as you can see right now here, we got on 2023, the terminal rate it's around 5.1%, up from 4.6% in September. So what kind of information are pricing in the markets? So that terminal rate, if you check the April next year, we are at 4.8%. The Fed showed 5.1. So there's a lot of discrepancy between the Feds, what they are showing to us, what they are projecting, and what markets are pricing in. And let me tell you, markets are quite positive on the terminal rate, but Fed's projection looks scary. So don't get too confident. Markets might be more bullish, more positive than the Fed, but one of them is wrong, either the Fed or the markets. And right now, I trust more the Fed, so let's focus on what Feds are watching and projecting. 2023 terminal rate 5.1%, and on 2024, then they start cutting and they are going lower, with a median of 4.1%, 0.2% more than in September, and then finally in 2025, we go down another point to have 3.1%. And in the longer run, 2.5% with the goal of the Fed of 2% for the interest rates. That's quite interesting. If we check the rate futures, you can see that in 2023, we go up, still going up until 5%, and then around December, we start decreasing the rates. 2024, heavier, more aggressive rate cuts, until 2025, in which we might be around 3.20%, 2.80%, and finally reaching the 2% that the Feds are targeting. So this is what the Fed are projecting, but be careful because markets are not pricing in that kind of interest rates. This is April 2023, this is September, 4.80%. So at least we are pricing in staying high all 2023, but the thing is that Feds are up here at 5%, but markets are at this level at 4.8%. So be careful because this discrepancy is not good. It's scary, at least in my opinion. I think markets are pushing a lot of price action, a lot of bullish sentiment that Feds are saying, no, be careful because things are not as you might expect. And we might see heavy pullbacks if markets are pricing in some interest rates that will not happen. So be careful. And at December, we are seeing interest rates cuts, but it's not when, but right now, how much interest rates at what level we will be in 2023. 5.1% as Feds are saying, or 4.8% that the markets are pricing in. So be careful with that. And finally, let's do a quick review about crude oil. Crude oil is now pulling back after a nice run. 1, 2, 3 big candles from 70 to 78, now pulling back a bit. Let's check the volume. Volume was, well, a little bit disappointing, but still in the red. Crude oil is minus 1% on the day, and natural gas is 0.21. So both of them are pulling back, but let's check the energy sector. Energy sector was distributing up here and then a big push to the downside, breaking this support, and now we are trying to establish some levels, chopping around, quite volatile, but I think in the long term, demand destruction will pull energy sectors down because crude oil and natural gas are quite high on the price. Let's go back to the Nasdaq and do the final remarks. So we are slowly grinding lower and lower, right now minus 3.15% on the red. So don't get too confident. We might see lower price action. Right now we are entering this gap below last week low, and this is quite dangerous. This is the big CPI on 10th of November, and this was the first big push after which we got this consolidation, and if we break these levels and start accepting below that, we might see a strong momentum to the downside, and because some bulls will be liquidated, some of them will be selling, and we might see a big push to finally reach 11,200 for now. So there is a lot of potential to the downside. Don't feel confident on this might be the support, because there's a lot of windows on the 2-hour and daily time frames for more weakness ahead. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time and see you in a couple of hours with the market recap. Remember that the trading day is not over yet. We might see lower pricing. Be careful. Don't try to find the bottom, because there will be no bottom, baby. And as you can see, we are breaking again low of days. But remember that discipline and risk management are key for success. Stay safe, everyone.